Hi, how are you? I'm Deb Sellers with Douglas Elliman, and I'm here with on my weekly calls with Kristine Bestler from Guaranteed Rate. She's a 20-year veteran in the mortgage lending business, and we're here to ask her a few questions about what's going on in the marketplace.
Love it.
Hi, Kristine, how are you?
I'm great. Tell me all about your questions. I can't wait.
Well, one of the questions that keep coming up all the time is, especially if you're a independent contractor, we know W-2 borrowers have more straightforward income, but self-employed borrowers take a lot of factors into consideration, even more so since COVID labeled self-employed borrowers at a higher risk. Can you explain what a self-employed borrower should do to prepare for getting a loan?
Really excited to answer that because this is going to help a lot of people prepare in the right fashion. So, yes, some of the same rules apply. We look at the last 2 years of your tax returns. We average your income as long as it's inclining income. But now that COVID's here and here for a while, we're also going to be looking at the effects on your business from COVID. So we're going to be looking at your profit and loss statement. We're going to be looking at your last two business statements, bank statements. So when we're looking at your profit and loss statement, we're looking to see, did you get an SBA loan or a PPP loan? Because those are not income. And we're going to reduce your income listed on the profit and loss based on that. Then we're also looking at the bank statements. In some cases, your income coming in will be less than the withdrawals, right? That does happen in business, but that doesn't work when you're getting a loan. So when you're ready to get a mortgage, you want to pick the two best months where income is really coming in, that profit and loss is really strong, and we're close to the end of the year. So maybe, if you don't have another, PPP loan or another SBA loan, let's wait till January, and then we were starting with a fresh slate.
Well, that's great information to know. Let me ask you, are they also, is there a specific amount of time that you need to show? A couple of years, 2 years, 3 years of, consistent income?
I love that question. So if you've been 5 years in the business, in some cases, we only look at your last tax return. But if you're less than that, we're going to look at the last two. And again, looking for inclining income versus declining income. If it's declining, we'll look for some answers. And if you really want a good story about how COVID affected some self-employed borrowers, I have one for you.
I'd love to hear it.
Okay, here we go. Names are excluded to protect the innocent.
No, it's really important. I find right now that this is such an important topic, and people really need to understand, what it takes in order to, be qualified.
Well, and this story really helps self-employed borrowers not to take it personally. Because
Yes.
COVID really has done a number for these guys. They're writing off all their income on their tax returns. And then we've got profit and loss statements showing PPP loans and all these things. And it's just not working out for them in some cases. So here's a great example of a very worthy buyer. Okay. This buyer managing many firms, making $600,000 a year consistently for more than 5 years. Okay. So on paper, we're like, absolutely, but due to COVID, right, we're forced to look at other factors, the profit and loss statement and the bank statements showing the income and withdrawals. The particular time of year that he applied was one where his income was very much less than what he was taking out on a monthly basis. So his withdrawals were exceeding his income, right? That doesn't mean all year round, right? It just means that particular period of time. So unfortunately, even though he had consistent income, because of the COVID guidelines, underwriters will not use common sense with this because it's straight guidelines from every investor. Common sense can't be applied. So he was not able to get a mortgage at this time. That is my best example of a very worthy buyer who just, due to circumstances, we just couldn't do it.
It's interesting.
And nor could anyone else, for that matter.
It's interesting how that's working. And it's not just the self-employed, but a lot of people are used to be able to apply rental, properties as income. Has that changed during COVID?
Well, no, that hasn't changed. But then again, it really depends on how you're writing it on your tax returns. So this is a completely separate conversation. COVID really doesn't take effect on that per se. So again, we're just looking to see what you're writing off, right? Most people want to write off all that income they make, and that's where we don't have rental income to qualify. We do if you're purchasing and you're getting a new rental agreement and it's never shown up on your tax returns before.
Excellent. Thank you so much for all this helpful information. It's really a time right now during COVID where people have all these questions, and it seems like things are changing left and right. So it's good to get updates. We really appreciate it, Kristine.
Oh, it's my pleasure. And there's more updates to come. Just stay tuned.
Great. Thank you so much. And we'll see you next week.